Hi guys, this is Wave 618. It's the 11th of August 2018, just gone 4:30 in the afternoon BST, and yeah, we're due an update on Bitcoin. So I've just got the 4-hourly chart pulled up here and we're on the logarithmic scale. I do have a tendency to focus on the logarithmic scale. Reason for that being is because Bitcoin tends to follow these exponential price movements, and any chart that has a tendency to move in an exponential fashion should really be looked at on the logarithmic scale. And the reason for that is because any trend lines that are drawn, whether that's a normal trend line or whether it's a Pitchfork tool, such lines get respected a lot better on the logarithmic scale. So that's the reason behind that. Okay, so in this video we're going to talk a little bit about the major trend, but also we're going to focus on this smaller trend here, in particular this wave down, which as I expected was going to come down to a minimum of 4,300, but as I alluded to in my last video, could easily touch this 3,000 level. So first of all, my wave count for the last few weeks has been this W, X, Y, X, Z pattern, so a really complex corrective wave. But that said, I did talk about the possibility of this all being a descending triangle, and I'll just quickly draw that for you, for those of you who haven't been watching my videos. So this would be our base of the triangle, and then this would be the top of the triangle. And the only part of the triangle that spoils this is this wave here. So if we were to label this triangle, it would be as follows. So it would be A, B, C, D, and E. So obviously this B wave, the fact that it doesn't touch this baseline here means that it's not perfect. It's not the cleanest of patterns. But that said, you don't, in trading, you're never going to see perfect setups as if you're reading something out of a textbook. So you have to allow for these differences, and as long as you understand the rules for these patterns, you'll know whether it's still valid or it's been invalidated. And the rule with the triangle is that it must hit both sides of the triangle at least 2 times. So you can see that it's hit the triangle, the base of the triangle here and here, and it's hit the triangle, the top of the triangle here, here, and here. So I'm very happy with this setup, and the reason this is important is because it helps us determine our target, because there's very often a Fibonacci relationship between this wave coming into the triangle pattern and this wave that leaves the triangle pattern. So I'll quickly, whilst we're talking about the triangle, just plot that Fibonacci extension. So I believe there'll be a 0.382 Fibonacci extension of wave W. So if that's our wave W, we extend that from the start of this final wave, which will be where the triangle finishes. I believe we'll come down to this, roughly around this 0.382 Fib extension, which is around the 3,200 mark. And there is a very nice horizontal support at 3,000. So what I'm predicting is a possible wick down to 3,000, but a candle close perhaps on the daily chart around that 3,200 level. That said, there is good horizontal resistance, support rather, at 4,300. So 4,300 is my initial target, where I would consider taking profits from any short position. So let's just delete that, and for the time being we'll delete this and these trend lines. So if it were a triangle, we'd be labeling it WXY. So that would be our W, the whole of the triangle would be X, and then our final wave would be Y. So that's one way of looking at it. And the reason I say that is if we just look back at what happened in 2014, we can see a similar play out here. However, that triangle that I mentioned that were currently completed wasn't the cleanest because of that B wave. In this case, it's still not as clean. It's even less clean than that one, to be honest. Now, if this was our W and this was our triangle, so that would be our A, B, C, D, E. First of all, D has come out of the triangle and A is not quite hitting the base of the triangle. But that said, this did wick down and the close of the candles was around this base of the triangle, and that would mean that there are still these two touches at the base of the triangle and 3 touches at the top of the triangle. And the reason that's significant is because if we look at the Fibonacci relationship between this wave here coming into the triangle and with this wave here that comes out of the triangle, let's just have a look at that now. So fib extension of that wave, extending it from where the triangle finished, and we can see it hits really perfectly that 0.382. So it's really just food for thought. As I say, these triangles are not the cleanest in appearance. However, you can see that once this horizontal line broke out, price retested it here and then it just shot downwards, which tells me it did look like the breakout of a pattern. So certainly something to think about, in my opinion there. Whilst we're just looking at the 2014 chart, I've drawn this large pitchfork. So this was our first pivot, second pivot was at the end of the W, and then this was our third pivot. And from there you can see that until price broke out of this dotted line, we still had a downtrend, and that trend was only really broken when this downtrend was broken, when this dotted line was broken. So right now I believe we're around this level. So we've not quite made a new low currently. So I believe we're around here at present, and as I mentioned in previous videos, we're going to be, think we're going to be ranging between this upper warning line and the upper median line, which is here. So price is going to move between these 2 points, and then at the end it could well test this median line here, like so. And now if we go back to our current chart, and we just need to plot our pitchfork. So I've already got these here. It's not that one, but that one. Okay, so again, first pivot here, second pivot, third pivot, and yeah, so until this dotted line gets broken, I will always be bearish. Okay, people were getting very bullish at this point, but I stood my ground because I knew none of the downward trend parameters had been broken. Until this line, if this line got broken, I would become bullish. Or another important parameter was we're on the daily chart, so the simple moving average. So this 200-day simple moving average, the 200-day moving average did not get broken, stood really strong, which tells me this downward trend is being respected significantly. So just going back to our original chart. So yeah, so right now, if we're going to see a similar play out to 2014 and price is going to range between this upper median line and this upper warning line, we may see a bit of support at this level because we've hit this upper median line here. So that's why I believe we've seen a bit of a stall in price right here. And it may just come, it might come in a sideways pattern. It may just test this upper warning line. That said, if it breaks this line, you can then expect it to go on towards the median line. So it doesn't have to be exactly the same as 2014, but if you're day trading or anything like that, I'd be taking profits if you're short at this point, just because it's at this upper median line, which is acting as a bit of support there. Okay, so pitchforks are, in my opinion, they're fantastic at determining trend, and it's so important to determine trend to know which way the significant price swings are going to go. Okay, so we're just going to focus now a bit more on what's happening here, because as I say, I expect price to come down to a minimum of 4,300. So let's focus on that. So let's go on our 4 hourly. And in fact, let's take off that pitchfork. And now we can look at this pitchfork. So again, you can always draw a pitchfork when you start to get 3 waves. Sorry, 2 waves. So your first 2 waves. So this is all going to be a very corrective pattern, because this is all corrective from 20,000 down to 3,000. It's corrective. So here it looks like a 3 waves down and then 3 waves up. So basically, I've drawn my first pivot at the high here, and second pivot at the low here, and then this is the highest of this correction here. So that's where I drew my pivots. Simple as that. And then, so on this pitchfork, you can see I've got a couple of extra lines that I don't always put on my pitchforks, and we can take them off. They're not as important. It's the 1.5 and 1.75. They can be taken away. These are the most important lines on any pitchfork. So if you create your pitchfork and you go to settings, all you need to do is you need the 1 line to be on there. So that's your 1 line. So essentially it's like 1 standard deviation away from this median line here. Yeah, and you'll get it plotted equal distance from the median line on both sides. And then the 2 is 2 standard deviations away from the median line. And basically, when the warning line, this is your warning line, the reason it's called a warning line is because it's telling you when that line gets broken, it's warning you that the trend has been broken. So yeah, that's the idea behind it. And the idea is that when price breaks one line, it will progress to the next line. So that's how they can be used, these pitchforks. And then once you've put them on, so first of all, it's important to note whether you're on the log chart or not, because it really makes a difference. For example, this ruins our lines completely. I find that price respects this pitchfork much better on the log chart here. So I tend to look at the log chart when I plot these pitchforks. So yeah, just going back to settings. So people have asked me how I choose my settings. That's why I'm just focusing on that now. So you do have to play around with it a little bit. So there's 3 main types of pitchfork that I will look at. Don't worry about this inside pitchfork. It's not so commonly used. It's these 3 that are important. So the original pitchfork, which is also known as Andrew's pitchfork, and you'll see on lots of other trading platforms that it's referred to as Andrew's pitchfork. So that's the one that is displayed here. I'll do a tutorial explaining all the key differences on them, but essentially this has a much steeper gradient than the other 2 pitchforks. The other one that I will really focus on is the shift pitchfork, which you can see that in this case it's not important, it's not as relevant. Price is not following this pitchfork, it's following a much more steeper gradient, and that's why I'm using this original pitchfork. So you do have to just mess around with it, try either the original or the shift and see which one fits best. Generally, if you're seeing an aggressive move down, it'll be the original pitchfork. If it's more of a sideways movement, a bit more corrective in appearance, then you want to look at the shift because it's a much more gentle gradient. So let's keep that the way it is. And yeah, I've just got my Twitter open here, so basically I just wanted to make you aware that I do upload the odd tweet of recent. I've been showing some pitchforks, giving updates on that. I find that's a good way for me to update you guys because I don't always have time to upload a video, so keep an eye out for my tweets in that sense, because I will put some screenshots up. Yeah, but basically what we've seen here, since we've got our first 3 pivots, you can see how price has really respected these pivot lines. So it came straight down and hit this median line. The general rule is after you've drawn your first 3 pivots, there's an 80% chance that the median line will then get hit. Yeah, so that's the first rule about pitchforks. After that, you're then looking at these lines to see, you'll see price trend ranging between these lines, and then when one breaks it will tend to go to the next one. So you can see here it tested the warning line, and I was telling people at this point, you'll see if you've looked at Twitter, I was saying we're due some consolidation, most likely to the median line, before we see another leg down, and that's exactly what we saw. So we tested the median line, started to come down, retest the median line before coming down again. Now, as I say, on the larger pitchfork that we were looking at, so that was on, not that one, this one, we have hit this upper median line, so we could see a bit of resistance here. So this is it's like looking at a confluence between two pitchforks here. So we could see price come up higher. That said, it has come under this line here, but not significantly. I'd want to see prices come down further than that, retest it, and then come down before I can say that this line has been broken and price would be then progressing to the median line here. So yeah, just explaining a little bit about pitchforks really. And there is another pitchfork that I just want to explain, and it shows some great price action. So let me just take those two pitchforks off, and we're going to put this one on. And to look at this, I think 15-minute chart shows it quite nicely. So on the previous pitchfork I showed you, I told you that price came down, tested the warning line of the pitchfork, then went up to the median line, and then came down to make a new low. In fact, let's keep that other pitchfork on. Yeah, that one. So this is where it hit that lower warning line, then price came up, retraced, hit the median line, and then I knew that price was going to start coming down from here. Why? Because you can draw this 15-minute pitchfork where here starts here, first pivot, second pivot here, then you've got a correction. Yeah, so once you've got your first two waves in, you can then plot your pitchfork, and you can see price broke through the median line really nicely, found resistance at the upper median line, again at the upper median line, and then there was a confluence of pitchforks here because you've got this median line of the higher degree pitchfork combining with the upper median line of the lower degree pitchfork, and then price came down, tested this warning line, yeah, came up again to retest this larger degree pitchfork of the median line of that pitchfork, and then it broke out. You can see as soon as this warning line broke, look how steep price came down. People were wondering why price came down so steeply. So there's people who are looking at this correction, looking at the trend going up this way, and when this warning line broke, price broke down fast. And look at the volume that came in. Yeah, big spike in volume. Yeah, but as I say, there is a bit of resistance now at this level. So alright, just wanted to show you that. It's another good example of a pitchfork and a demonstration of how they can be used on different time frames. So let's just zoom out, go on the 4 hourly now. Let's take off these pitchforks a moment. Okay, so yeah, as I was saying, I'm looking for price to come down to around this, at least test the 4,300 level, so around here. Reason for 4,300 was that was the 78.6% fib retracement of the move up to 20,000. Yeah, 20,000, and but that's our minimum target. That's 78.6 retracement. Next target would be 3,000. So yeah, watch my last video if you really want a good update on the larger time frames for Bitcoin. In this video, I really wanted to dwell on what we're seeing in the shorter term price action. As I say, we're following a very nice trend here. I see price certainly going to 4,300 before breaking any of the highs here. example, this 8500, and I'm looking for price to come down to around potentially the 3000 level. And yeah, a lot of people have asked, what do I think will happen at that point? Well, there'll be a bit of a candle wick, but I wouldn't worry about catching the bottom. If you worry about catching the bottom, you very often miss it. So of course at this level 3000 there's a huge amount of support, so yeah, you could potentially put a day trade on there if price comes down to there, but I expect price to go sideways for a while, and I'm not going to worry too much until price breaks out of this downward so if we look at the Pitchfork, this one, so I'd want to see horizontal price action, and then really when price breaks out of this this warning line here above that, so at that point I would expect to see price going up and not forming lower lows after that point. Yeah, so one additional thing I want to look at from a volume point of view, so volume is very important. So I want to pull up the OBV. So if we just have a look at the OBV. Now, I don't know how long you've been watching my videos, but I did talk about this probably certainly one of my first 5 videos, I think it was, because I've been talking about Bitcoin coming down from a long time ago. If you look at my earliest videos, you'll know that I've always been bearish on Bitcoin before it eventually goes much higher. So there is very good horizontal support on the OBV at this point here. And in fact, I want to look at this on our normal chart, so not the logarithmic scale. And let's take our drawings off here. Alright, so this is our linear chart now, and okay, it's taken off that horizontal line on the OBV, but look on the OBV here, we've got really good horizontal support, and I was saying I want to see a retest of this. The reason being, what the OBV tells us is the net volume in terms of bulls versus bears, and at this point, this was when Mt. Gott's collapse happened in 2014, and it was at this point, this was where the maximum volume was, which was obviously bullish, and these people would have held on to their positions whilst price went all the way back up to $20,000. So these people are not going to get wiped out of the market, but I don't see price coming down to, what was this high, so $1,100. I don't see price coming down that low, certainly not. So these people, I can't see them being shaken out at all. Anyone who got in after $1,100, I can see them being shaken out, but the volume that represents this high here, I can't see that being broken. So once the OBV comes down to this level, so around here, that's where another indicator that I'll be looking at for price to start its accumulation phase and then start to move up. So I expect to see the OBV moving sideways as well when it gets to this level, and forming its final low. So that's another indicator I'll be looking at, and I urge you also to keep an eye out for that one. So yeah, a few indicators really. So as I say, if it is a triangle, it's not the cleanest of triangles, but we could see a 38.2 fib extension of this initial W wave, which would bring us down to around 3200. I'd be looking for the OBV to hit this horizontal support here, and so yeah, that's the way I'm looking at it. And as I say, there could be a little bit of support here. Price may start to come up a little bit. That said, it could come down further. It could just follow on the Pitchfork. It can just follow these lines down rather than bouncing off them and going to the next line. It could just with time keep following the Pitchfork line, or it could suddenly drop down to the median line as I discussed earlier. Alright, so just a few things to think about there. But yeah, follow me on Twitter as well. I will be doing more frequent updates on there. Any screenshots that I think might be useful for you guys, I'll just upload those, and hope that helps you, keeps you informed whilst waiting for my next video. But yeah, certainly we're very bearish. I'm really surprised that there's so many people talking about bullish scenarios. People drawing all sorts of weird patterns that I've never heard of. I don't know what people are looking at now. Maybe some kind of quadruple bottom here with 1, 2, 3, 4 touches. I don't know. But certainly this is bearish. I don't want to hear any more bullish arguments. And I know that as soon as price does start to come up higher, people saying, "Oh, Bitcoin failed to make a new low. This is clearly bullish." But please, until these downward trend lines get broken, only then you can start talking about a bullish scenario. So best indicators for trend are pitchforks and moving averages. Once they get broken, then we can start talking about a change in trend. But until then, price is going down. So I'll leave it at that. Yeah, and your support's been brilliant. Yeah, subscribers on YouTube and Twitter are increasing very nicely. So really grateful to all your support. And yeah, keep it up, guys. Really appreciate it, and it motivates me to keep making more videos. Alright, so I'm going to wrap it up there. Take care.